Fellow board members of Ttngl, Mr. Dominic Rampersad, President, Phoenix Park Gas Processors Limited, Ms. John Webb, Company Secretary, Aegis Business Solutions Limited, Mr. Sheldon Sylvester, Chief Financial Officer, Ttngl Limited, Mr. Daryl Walcott Grappi, Partner, Deloitte & Touche, the auditors for Ttngl, Ms. Orisha Maraj Johnson, Camacho and Singh's Ttngl's corporate attorney, valued shareholders, members of the media, distinguished ladies and gentlemen. The year 2020 will be remembered as the year of coronavirus, as a global pandemic caused economic and social disruptions not seen for a century. Market prices for crude oil, natural gas, petrochemicals, and natural gas liquids, or NGLs, were all affected by this virus. During 2020, we observed significant price volatility. NYMEX West Texas Intermediate crude oil prices was at a high of US $63.27 per barrel in January 2020, before falling to US $16.55 per barrel in April of that same year, and then US $48.52 per barrel by the 31st of December 2020. NGL products are strongly correlated to crude oil prices and suffered similar fluctuations. The U.S. Energy Information Administration reported that the impact of the COVID-19 pandemic led to steep declines in global petroleum demand and to increased volatility in crude oil markets in the first half of 2020. As petroleum demand fell, U.S. crude oil producers did not respond to the sudden drop in demand, and crude oil inventories increased. Brent crude oil spot prices averaged US $41.96 in 2020, down from US $64.30 per barrel in 2019. Natural gas spot prices at the Henry Hub in Louisiana averaged $2.05 per million BTUs in 2020, the lowest annual average price in decades. As an oil and gas economy, Trinidad and Tobago was impacted by the fall in hydrocarbon output and prices in recent years. The trend towards lower prices and output was further exacerbated in 2020 by the impact of the pandemic, which led to decreased demand and abundant global supply, depressed commodity prices, reduced economic activity. Government-imposed restrictions on movement and other public health measures designed to reduce the spread of virus also impacted. Despite the challenging year, Ttngl recorded an after-tax profit of $5.8 million for the year ended 31st of December 2020, compared to a profit of $120.3 million in 2019. This translated into earnings per share of $4.04 in 2020, compared with earnings of 84 cents per share in the preceding year. The results reflected a lower share of profit from PPGPL, the company's investor in the joint venture, compared to 2019. Based on these trends, as well as the company's results for the year ended 31st of December 2020 and its cash flow position, the Board of Directors of Ttngl approved a final dividend of 5 cents per share. This dividend represented the total dividend for 2020 and was paid on the 12th of May 2021 to shareholders on the register of members as of the 23rd of April 2021. With respect to payment of dividends in US dollars, based on continuing conversations with the Ministry of Finance, there is no decision at this time to proceed with this initiative. The lower financial performance for Ttngl in 2020 understandably resulted in the company's share price reflecting the environment, with the share trading at a high of $24 and a low of $14.25. At the end of 2020, Ttngl's share price stood at $17, 29% below the closing price of $23.96 for 2019. With improved results being reported for 2021 thus far, the share price has somewhat stabilized and closed at $17.49 on the 29th of June 2021. In 2020, PPGPL recorded a profit after tax of $116.8 million, which represents a 49.5% reduction when compared to its 2019 results of $231.4 million. And this decline was due primarily to factors associated with the pandemic, which also negatively impacted gas processing volumes due to reduced gas demand from petrochemical producers at Point Lisas, as well as lower Mont Belvieu NGL prices. Despite the negative impact of the pandemic, PPGPL continues to maintain its strong operating performance, as reflected by the renewal of key NGL contracts for the Eastern Caribbean market. Additionally, there was an improvement, significantly so, of 11.1% in the NGL content in the gas stream and at 3.8% on higher price differentials. PPGPL continued its focus on value creation and operational efficiency and excellence to secure its long-term sustainability. 2021 was a good year, and starting in Q4 2020, the energy markets began its recovery. This improvement is evident in Ttngl's performance for the first quarter of the year. For the first 3 months of 2021, Ttngl recorded after-tax profit of $50 million. This represented a 622% improvement over the comparative first quarter figure of 2020, when $6.9 million was recorded. Correspondingly, earnings per share for Q1 were 32 cents compared to 4 cents for the same period in 2020. Ttngl's improved profitability for the first quarter was derived from a higher share of profits from its investment in PPGPL and was driven by higher Mont Belvieu natural gas liquid prices, which were 49.8% above the 2020 period. Before I conclude, permit me to provide an update on the results of the National Gas Company of Trinidad and Tobago, together with its subsidiaries collectively referred to as the NGC Group. As at the end of Q1, that is March 31st, 2021, the NGC Group announced an unaudited after-tax profit of $191 million for quarter 2021, as compared with $31 million for Q1 of the prior year. Group revenues also stood higher at 4.5 billion TT dollars compared to 3.2 billion for the same period in 2020. These improved margins were driven by a rebound in commodity prices after the market challenges of 2020. Our results as a group as at May 2020 reflect a continuation of these very positive results. We recognize the importance of meeting shareholder expectations and delivering long-term shareholder value. It is for this reason that we have set the platform for future sustainable growth. We are today an integrated energy company, and we plan for the future to be focusing on continued stability and, of course, the introduction of the green agenda. I would like to place on record my thanks to the senior executive team, management, and staff, and my colleagues for the outstanding efforts during the last year. Thank you for your very kind attention. I will now ask Mr. Dominic Rampersad, President of Phoenix Park Gas Processors Limited, to share his views on the company's operating and strategic direction moving forward. Mr. Rampersad.